on this special webinar hosted by ETF Junction. As you know, we are India's first dedicated platform for ETFs under our Pathshaala initiative. I'm Saket Kumar, co-founder ETF Junction. Today, we are about to explore the dynamic landscape of liquid ETFs in India. We have a distinguished panel of experts with us to help us unlock the opportunities and also navigate the challenges in this exciting domain. It is indeed an honor to introduce our esteemed panel, who is here with us, who brings a wealth of knowledge and experience to the table. First, we have Mr. Umesh Kumar Dalia. He's the head of sales at Mirai Mutual Fund with a deep understanding of the Indian ETF market. Welcome, Mr. Umesh.
Thank you. Thank you, Saket.
Yeah. Next, we have Mr. Shankar Venkatchalam, AVP and Head of Institutional Broking at Cholamandalam Securities Limited, an expert in the field of institutional investing. Thank you, Mr. Shankar, for joining us.
Thank you. Thank you. Thank you, Saket.
Yeah, last but not the least, we have Mr. Sanjeev Mota, Director of Conjalochen Finserv Private Limited, who brings in a holistic perspective on financial service sector. Welcome, Mr. Sanjeev.
Thanks, Saket. Thanks for having me.
Right. So today's discussion revolves around the world of liquid ETF, which is exchange traded funds in India. And these financial instruments are gaining prominence as we progress as valuable investment options, right? Our goal is to shed light on the opportunities they present and the challenges one might encounter when they go along this investing way. Before I proceed, a brief on our initiative from Pathshaala. I would like to take a moment to emphasize the significance of our Pathshaala initiative from ETF Junction. It's a passive investing which forms the core of ETF investing and which is gaining momentum worldwide. And Pathshaala is a unique platform from ETF Junction, which is dedicated to raising awareness about this concept among Indian investors. They're making an effort. I think if you would have seen that in a series of a different webinar we've been hosting, which is very educative, which is very informative, and we get so many specialists and people to explain about the basic concepts and latest information on the ETFs. Coming to the start, the format for today is straightforward. I think we will just followed by an interactive Q&A session. Right. So throughout the webinar, we encourage all the participants who are there to please keep posting questions in the chat and raising your hand for any live interaction. We'd like to hear from your questions, right, which you want from the existing panelists, right? So before taking much time, let me give you a brief how the entire ETF segment in India is shaping up. I'm very happy to share that the way mutual fund industry in India has shaped up. In last 10 years, it has had a 20% annualized growth, right? And if you look at from last 23 years, from 1 lakh crore to almost 47 lakh crore. That's a phenomenal ride which we have seen. Now, clearly, if you look at the larger emphasis as of now has been the total AUM impact has been from the equity side. Out of 47, roughly 32.23 lakh crore is from the equity side. But fixed income is also not less, roughly around 14.5 lakh crore. That's a good number. But when you talk about in this 14.5 lakh crore, roughly 30% is being contributed by liquid or money market instruments. So there are a lot of instruments which are there. But if you just take the overnight funds and the liquid contributes roughly around 5 lakh crore, to give you a larger number, the overnight fund is roughly around 1.4 lakh crore, liquid is 3.5 lakh crore. So this is where the entire mutual fund industry is, as of now. Now we get to see that the passive industry is shaping up pretty well again. Among this entire 47 lakh, passive accounts for around 17%. Which is a decent number in a very short span of time. If I can give you in last 4 years, but it was roughly around 7% of AUM in 2019 to September 2023, it is roughly around 17%, roughly around 8 lakh crore. So that is where the entire impetus is coming. If we talk about the number of investors or the AUM, that's a great. Now, as we have seen, there is a good amount of growth happening in the liquid AUM, and they contributed significantly to get a new segment called corporates who were investing with either current account or a similar, and they presented a very good opportunity to invest better with relatively better return. we today are discussing and talking about something similar in our ETF space called passive, in passive ETF called liquid ETF, right? That is gaining momentum, and we have seen 4, 5, 6 AMCs putting up this particular fund, and from their entire gamut, and it is just adding up. So I'd like to bring in here, Mr. Umesh to just share how do you define liquid ETF, right, for audience, and what are the key benefits and risks investing in liquid ETF compared with the other investment options which they have at this juncture. Mr. Umesh, please.
Yeah. Thanks, Saket, for having me here. And so basically, as you rightly pointed out, the ETF, the overall mutual fund industry is growing, and we are at again, still I must say we are at a nascent stage, because if you look at the global markets as compared to the Indian market, but the percentage growth, I must say, is very good. And I think similarly, the passive side also is growing very significantly. And why the passive is growing? Because in passive side, what the kind of products are being launched are basically keeping in mind every investor's need. The products are being launched, as you rightly said, that the liquid products are primarily used by institutional investors and any investor who wants to park their money for a certain time period. But liquid ETF, when it comes to, this is a product which is basically a product which is listed on stock exchanges. This is a product which can be used for short-term fund parking, for primarily for an investor who is dealing on exchange, who's trading or buying and selling or having any trades on exchange, and whatever ideal money they have lying or left behind after the day or a week or whatever it is, and the investor knows that this money is he or she is not going to use for certain time period. This is a product where the investor can park their money, because the liquid ETF is basically, since as we all know that index funds are passive products, are basically based on an index, the replicable index. So the liquid ETF is also based on an index which invests into underlying securities, which are one day products. Basically, so every day the investment happens. So this is a product where investor can get a exposure into. Now, if I compare it with the existing ecosystem of liquid, the normal liquid products or other products are basically available on mutual fund platform, where liquid is available on exchange platform. This is the main difference, I must say. From a cost perspective, the liquid ETF is coming on a little on higher side as compared to normal liquid fund, because of the underlying expenses, because you have to deal with both the custodians and the indices and all that, and there is some cost to it. But as I said, the liquid ETF is primarily from an ease perspective, and with that, this is a product which gives you that kind of exposure. Now, if I talk about risk and other aspects to it, see, any kind of investment always comes with a certain kind of risk parameters or risk associated with it. For equity, it will be on the higher side. For liquid, it will be on maybe for debt product, it will be on the lower side. For liquid kind of product, it will be very, very minuscule, because the product is such that reinvestment, or you can say the expiry happens every day. So it's a product which getting matured on a daily basis. So kind of risk or mark to market is not that much impacted. So there might be some kind of unforeseen events where you can you can see some kind of experiences. But if I compare it with rest of the products available in the market, we believe that the risk side is very, very minuscule on liquid ETF side. So net, if you look at, the liquid is a product which is primarily for investor on exchanges, both NSE, BSE, for their parking their short-term money. Cost is on a higher side. It start from a 20-25 basis point and go up till, say, within the range of 1%. This is how the expenses are being managed here. There are already 8 products available in this space, and I can foresee that many products can come up. So investor can always look such product for a short-term parking on exchanges.
Thank you, Mr. Umesh. It's wonderful insight into what is happening in the ETF space, the liquid ETF space. Next to Mr. Sanjeev, you see, we have seen that the simplicity is the hallmark of passive investing and ETF. globally, forget about India. I think these are very early stages, as Mr. Umesh also said. Simplicity is something which is really luring a lot of investors across the country, and globally also they are coming. Can you just explain a little bit? How do liquid ETF maintain their liquidity? What is the construct? Where do they invest? What factors should layman investor, who is there in the as of now, who's hearing and listening to us, can consider when investing or selecting a specific ETF? Also, how do liquid ETF contribute to the overall diversification, right, in an investment portfolio? Mr. Sanjeev.
Thanks, Saket. Thanks for having me on this webinar.
You are on mute,
So
sir.
as far as
You are on mute.
liquid ETFs are concerned,
Sir, you are on mute.
no, I have unmuted. I have unmuted. 1 second. Am I audible?
Yeah, you are audible.
Yeah, we can hear you. Go.
You can
Please.
hear. You can.
Yeah. So basically, the underlying for the liquid ETF are overnight investment products, CDLO or repo products which are available. And so as Umesh was said, it is like a daily investment kind of product. So it's the lowest risk product which you can say on the fixed income side, because there is hardly any duration as far as the underlying is concerned. And and as the name itself suggests, very liquid. So you can withdraw your money at one day notice, because the commitment of the underlying asset is for one day itself. So it gets reinvested every day. So that is as far as the liquidity for the underlying assets are concerned. As far as diversification, so any portfolio would have some component of cash, because most portfolios are never invested 100%. If you see even mutual fund industry, their investments on an average ranges around 93 to 97%. So there's always some cash in a portfolio. Now it's always better that if the cash generates certain returns for you, and of late overnight products have started giving very good returns because the interest rate in the entire system has gone up. So repo rate, which used to be at 4.25% more than a year back, it's now at 6.25%. So the point is that the yields have gone up pretty significantly, and it is much higher than what most people would get in their savings bank account if it is an individual. Current account anyway doesn't generate any return on the idle fund. So in terms of asset allocation, it is always advisable that the cash component of your investable assets be parked in a asset which is very liquid and which gives you decent return. So from that perspective, liquid ETF is a very ideal product and more suitable for people who invest in equities, because you can offset your purchase or sale cash flows with the cash flows of underlying liquid ETF purchase and sale. So you have sold a share, you can buy liquid ETF and it seamlessly gets invested into the underlying asset, which is giving you a fixed return. And vice versa. If you're buying some stock, you don't have to bother about where to move funds from. You can simply sell back the ETFs, and that offsets the cash flow, whatever gets generated from your equity transactions. So it's been gaining attraction a lot, and I think there is a very compelling value proposition as well as asset allocation perspective. Also, liquid ETFs are a very good option.
Thank you. Thank you, Mr. Sanjeev, for that valuable insight. As someone with a very good understanding on that part, just for the audience, larger audience who are there, basically, for trading, you have your own bank account and a trading account. So when you switch the fund, right, for purchase or sell, after selling the security, it takes time. And what are the money which is lying in the that particular account with a broker called margin account or whatever you name it, you don't get any interest. But here, this is what it is of a big help. If besides putting money there, you directly put into the liquid ETF, you at least gain 1.5% to 2% more than the saving account. And as Mr. Sanjeev said, that current account doesn't yield any return. Obviously, this is something which really helps. And we are seeing that really gaining good momentum from investors, largely from institutional side. And I hope these are very early days, as Mr. Umesh is also sharing. We will get to see really shaping as a bigger part of this entire ETF AUM. Right. Coming to the third question, Shankar, I think you have a very holistic view of the financial service sector, right? As an individual, you have seen so much of things, right? Can you just share historical data or performance statistics of liquid ETF in the Indian market, and how do they perform in a different market condition? As I think just now Sanjeev shared that since the overall interest rate has moved up, and those CBLO rates or the repo, everything has moved up, right? Clearly, investors are making really good return, which FDs are giving, or maybe the savings account is 3.25, or maybe little higher 3.5. Here you can make 1.5, 2% more. So can you just share, how has the historic performance of the liquid ETF been? And, does it differ in different market conditions?
Hi,
Mr.
hi Saket. Thanks for calling me into this Pathshaala. And as Umesh and Sanjeev said, so liquid ETF is a product which is created for the investor category only. Mostly a customer who invests in stock market because of the time lag. As Sanjeev very clearly explained, you can just switch the trades. Suppose if somebody wants to buy a share, they can sell liquid ETF and buy a shares on the same day. And nowadays, even exchange accepts this as a margin also. So coming to the point where you ask about this returns part, okay. So typically, the returns will be equivalent to your liquid fund. It may hovers between liquid fund between 4 and 6. That's what they're in historically time being. And second, and the major thing is people should consider that this product is not for a very long term. So people who uses the money cash flow very prominently for buying and selling of investments, or they see an unforeseen, like example, last 2 days back we saw a market crash. So suddenly, if somebody has kept in FD, they have to go switch off. They have to wait for 1 day, 2 day. Now, if you have in liquidity, if there is nothing, just call a broker or sell in the screen a liquidity ETF and buy a shares. So that's an opportunity which gets accounted in liquid ETF. And if you see the return historically, liquid ETF, it was hovering between 4 to 6%. So right from in a interest rate, when it goes up, it can go up to 6. Now I think now recently, if you see, it is around 5.5 to 6%. It may be more also. Whereas if you see in 5 years back, it was around 4 to 4.5 when the entire industry interest rate was down. So that's where it plays. So it always plays 2 bips to 3 bips differentiate between the liquid fund and liquidity. That's where it is there. People should consider this. Why? Because nowadays, not only a normal individual, because liquidity started 15 years back in India, 15, 16 years approximately. So when it started for the customers who want to sell the shares, they buy liquidity. Now, if you see the customer segment has improved. Before it was just only individual customer, then it become a corporate, then become your all of your investment category like your AF, PMS, uh, all your institution, mutual funds. All people are coming away because you need a margin. So especially from last 1 year back, when SEBI came with a new regulation on the broker about this margin. So this product has become a very vigilant. Why? Because everybody says that okay, when I want to trade in F&O, how to keep a margin? I can keep this liquidity as a margin. So that's where I feel more people are coming forward for this liquidity of the fund. AUM has gone up, and in fact, as Umesh said, there are 6 to 8 AMCs are there now already, and I think more AMCs will come into liquidity of, and this junction will be a prominent. Now, if you see, entire liquid fund is approximately 4 lakh crore, if I'm not wrong, if the exact, I may be wrong with the exact number. It's around 4 lakh to 4.25 lakh crore is a liquid fund, and the liquid ETF is now it is around 14 or 15,000 crores. So this segment will grow up like anything. So, and if you see even ETFs, what the number as you mentioned it, ETF is growing in India, not only in India and the globe. You see, last 10 years, ETF passive investments is growing by almost 20% CAGR every year. And if you take the number, the net inflow, it was 9%, 10%, 10 years back of the total inflow. Today it is 90% of the inflow. So that's where ETF plays a vital role. And liquid ETF can be a point where customer can think that it's ease. One is very easy. It's a ease. You get a return and you get a time return. That means if I want to invest in a free cash to in a mutual fund, either I have to wait for 2 days, because if I sell today in stock market, I will get only on T+1, and
Correct.
T+2 only I will go and invest. Whereas here, if I sell on T day, I can buy on the T day where I get interest from T+1. So this is the part which we can do it. And respective another point which I want to add it, though you are not pointed it out is how to manage the liquidity. So people have a construed that whether I will be able to sell my liquid ETF or redeem my liquid ETF after 2 days or 3 days, where the liquidity comes. Whereas in mutual fund, you go and just redeem. Here, the market maker of the AMCs plays a vital role where they will provide the liquidity. Suppose if you want to buy 100 crores, you can buy in one shot. So there is a liquidity available in the system that will be provided by the market makers. Suppose you want to redeem 100 crores, so it can be done immediately. So that's where it is organized. The system is very organized. So customers can get into the level of trade can be even in multiples. That's part. That's it, Sargit, from my end.
Thank you, Mr. Shankar. I think it was really very well explained. I think the way things are shaping up from 9% to 19% so fast, clearly there's a lot of room. Just to share, I think if you look at globally, the total cash market to F&O market is 15 to 20 times. Incidentally, in India, I think it's mind-boggling. It's roughly 400 times the way entire F&O segment and that segment has shaped up is clearly showing that there is a huge potential. And since this particular instrument largely is being used, right, and so apt to be used for margin funding, clearly it has a huge and a very long future. Now coming back to Sanjeev, we have seen an early adopter of this particular instrument, broker, family offices, HNIs, right? Whosoever is doing, and as I stated that the transactions are increasing, every day. I think $3 trillion market cap, right? Clearly, the trading is moving up every day. 12 crore customers so far have been added as far as their new, DMAT data has come. Clearly, I think this product is going to be a real, needed one for those segment of customers. Can you just explain who is the target investor for liquid ETF in India, and what are the common use cases, right, for these investments, and how can institutional and retail investor incorporate this liquid ETF in their portfolio? Sanjeev.
Am I audible?
Yeah, you are very.
Yeah. So basically, this is a fixed return product. It's a debt product, and it is mostly used for cash management, as I mentioned earlier also. Now, the cash management need could be of an individual investor, it could be of a broker, it could be of a corporate treasury, or it could be an institution. So basically, the only purpose this product offers you is generating return on your idle cash. So it has appeal to all segments of investors, and all segments of investors are allowed to participate in it. So depending upon each type of category of investors and their cash flow, they can very easily deploy or withdraw money from this particular instrument. So that is the appeal of this product, because it addresses or gives an opportunity to each category of investors to use this product for their cash management, and it gives you much better return than your savings bank account. It's very liquid. So the positives of this product are too much, and that is why this category is growing, and that is why so many mutual funds are entering this space.
Okay.
And more so, liquid funds, recently, few months back, SEBI introduced some restrictions on withdrawing money from liquid funds. So the appeal has also gone up for liquid ETFs, because those restrictions don't apply to liquid ETFs.
Can you explain a little bit more, Sanjeev, here? This very pertinent point, right, for our audience. What are those restrictions? If you can just explain a little bit.
So there is a sort of a lock-in period which was introduced that,
That 7 days lock-in period still prevails.
Yeah, correct.
Okay.
So which does not apply to liquid ETF. So
you mean to say that this is compared directly with the overnight fund, where there's no lock-in as far as mutual fund?
Correct. So there is no lock-in for an investor if you come into the liquid ETF.
Correct. Yeah, that's great. That's wonderful. Thank you so much. It was really well explained from your end. As we move further, we are seeing a lot of trends coming up. Just to give you some understanding, I think if you look at last year, and I think also what Sanjeev shared, the way it is catching up in terms of the adoption. Globally, we have seen roughly around 1.6, and the data is as on September last month, right? 30th of September, we're talking about. $1.6 billion has been the size of liquid ETF. And clearly, if you look at just last 1 year, it was minus $500 million. So roughly $2 billion of addition in terms of the asset largely is being contributed to the fact that interest rate has moved up. And globally, it was roughly around 1 to 2%, which is now 4.5%. And it is really, when we talk about USA, which is roughly around 5% rate of interest there, clearly it is lapping up huge amount of, AUM there. And we are seeing something similar, the trend as it shows. Can I bring in Sankar here, that are there any emerging trend and innovations in the liquid ETF space that investors should keep an eye on, right? Maybe higher interest rate regime as of now. And how might the market for liquid ETF evolve in India in the coming year? What is your sense on that, Mr. Sankar?
See, basically this the trend of investment of a liquid ETF is different from other investments. See, why people should come and do invest in a liquid ETF? It's basically they want to manage the cash flow management. It's very simple. Whenever you see there is a volatile market, okay, whenever there is a volatile market, automatically people will move more into liquidity ETF because they don't know when the opportunity will come. So now if you see the entire globe is getting into volatile, very volatile. Okay, there is complete uncertainty. So most of the customers, most of the HNIs, most of the family offices will always want to see that when the liquidity will start creating. This is one trend which always will be there, not only now because of it. The second trend which we see, as you said very clearly, about this F&O, because of late the kind of transaction happening in F&O is huge, because if you see the kind of transaction in options or futures, and you see lot of hedge funds coming into in India, even if you see most of the family offices do a long short, whatever the strategies, those kind of funds will start investing in liquidity. Why? Because they need to manage the cash flow, or they have to manage the margins. So, and exchange is giving this as a benefit for the margin. So that's where it comes. So typically the trend is whenever there is a volatile, you see a lot of money coming into liquid ETF. So when there is any large volatiles, so that's it. Otherwise, if you see, ask me that whether is there any new thing is going to come, as of now, not much. Okay, because it's a straightforward, simple product. Okay. There may be more AMCs coming in, more product, this kind of product, we will evolve as a liquidity, but it will also be straightforward overnight fund only. Am I audible? Sorry.
I think Saket has got locked out.
Hi everyone. We'll just wait for Saket to rejoin in a couple of minutes.
Hello? Hello?
Yeah, you're audible.
Yes, okay. Yeah.
Yeah. Thank you so much for that insight, Sankar. And there was some connectivity issue. Just to take this forward, right? The fact that you're saying that, this is where we are seeing the growth happening, in the entire fraternity. Between liquid, fund and this particular, liquid ETF, clearly, as far as the inherent instrument which you are taking, which is CBLO and others, right? You also have a liquid fund 91 days instrument you can take, right? Up to 91 days, right? Which is not in this one. So how do you see the return impacting? Will it have in terms of risk and return, how is it placed there?
Recording in progress.
See, the returns, as mentioned earlier, there will be a marginal impact when compared to liquid fund, maybe a tracking error of of 0.1, 0.01 or 0.02. So that will be the difference. Otherwise, it will be mostly in line with the return of liquid fund.
Okay, and also the risk will be a little higher there.
Here it is more of a overnight fund, so the risk is relatively very less, very less, because every day it
And any
redeem,
idea?
every day it can.
Okay, could you just explain a little bit that the minimum NAV stands at 1,000. Is it everyday dividend which is declared, or is it weekly? Some light there.
Yeah. See here, unlike your liquid fund NAV, it is 1,000 rupees. Okay, and dividend most it depends on the AMCs. There are AMCs who gives every week. It is not every day. It is every week. So some AMCs will make a payout as a cash, and some AMCs will give it as a growth.
Okay, okay, great. And how things, especially in terms of fractional unit, because you get the extra units, right? Not the amount. So how is that fractional unit? Can they redeem? Can you just throw some light there?
Yeah. See, normally the fractional units, once you create a one unit, it can redeem it, or there are options where AMCs can withdraw as in direct this ones. That's a one is there, or if you put in MFSS, it can go in the fractional units.
Okay, thank you. Thank you so much, Mr. Sankar, for that. Now, coming to Umesh, I think we're clearly seeing that globally and also India, the way things are changing, and also this is making a strong inroad, and especially as we stated that the trading community is growing, and clearly they need this product, and that is where we clearly fit a huge fitment out there. So as a whole, what is your view on the overall growth of passive landscape in India, and what are the unique features this particular Indian products as Mr. Umesh?
Yeah. So basically, see, as I said at the start of the discussion also, that overall, this mutual fund industry, or the within the mutual fund industry, the passive industry also, we are at a nascent stage. Slowly, gradually, the kind of products we are now are getting launched. I think Indian industry, especially on a passive side, it's on a right track, and it's a very fast forward track. Right now, as we speak, there are already 20 AMCs who have already started launching. They have either launched, or they are accumulating how to launch. They're thinking on it. That 20 products, 20 AMCs have already launched their products. Many more are already thinking on this. Right now, as we speak, the overall passive industry is around more than 8 lakh crore, out of which the ETF per se, only ETF is around 5.7 lakh crore, and that's primarily because of inclusive of government ETF money as well as non-government money. I'll just take you a little back from 2014, when the government first time announced that the EPFO can also take a ETF route through investment for market investment, and also they said that the disinvestment from government side would be can be done. They will explore the ETF route. I think from there, this ETF journey, actually the push from the government started, and right now, from there, right now, if we talk about 2020, the industry AUM was around close to less than 3 lakh crore, and right now we are at more than 8 lakh crore. This is how the growth of this passive industry has taken. Now, if we talk about overall products, right now there are multiple products. There are around 400 plus schemes are already there, including into overall passive as a space, which includes ETF, which includes fund of fund, which includes index funds also. Out of 437, there are 16 ETF, which are primarily 16 products per se, which are primarily invest into where their government money is coming into. There are 193 plus index funds are already there in the market. Other than government, means the funds where the retail investors are also coming in, there are 170 products are there. There are around 60, more than 50 fund of fund which invest into ETFs, right? So basically, it's a combination of multiple products on a passive space, which is slowly and gradually growing. And we believe this is going to be to the next level in coming years. Now, since regulator also is pushing very hard, they are trying whatever is needed in terms of enhancing the liquidity on exchange, making sure that the investor doesn't have a bad experience. And when we talk about the liquidity part of it, be it a normal ETF or a liquid ETF or equity ETF, as Shankar rightly mentioned, that the liquid or any ETF for that matter, the market maker plays a very important role. And I think market makers are pretty evolved right now in India, and you can see that any kind of trades have been addressed in the market, and slowly and gradually I think more and more people, more and more companies will be interested towards doing this market making job, and then we'll see that the liquidity will be managed at that level. So right now, as I say, that this is at a very nascent stage, but within India it's not, though there is a discussion and we all know that the global funds are closed, the money taking from global funds right now, the restrictions are there. But let me tell you, within India also there are multiple products which are being launched and quite innovative in that past, be it smart beta, be it your no different kind of product which we don't even talk about it, right? There are broad-based products like Nifty 50, Sensex, or maybe mid cap, or some kind of products. There are sectoral products like your banking products, yeah, your consumption related products. There are themes, there are smart beta products, there are debt related products also, be it on a maturity side, be on a liquid side. There are commodity related products which is on a gold and silver. There are international products. So it's a combination of multiple products, multiple segments. And I must see, I can say with a lot of confidence that from here we can see that this industry will grow multifold. I must tell you one more thing. That's right now the ETF industry has a daily turnover around 550 crore, out of which around 40 to 50% turnover coming from liquid ETFs only. This is how liquid ETFs are being used in India, and I can see this is gonna grow going ahead from here when time comes. So yeah, this is how the market is, and I can say with a lot of confidence that things will change very soon. Grow from here, I must say, when we talk about product.
Hear me? Hello.
Yes, Akid.
Hello.
Yes, Akid.
Yeah. Thank you, Mr. Umesh. The entire future is up. I'm tempted to ask one thing, just that, obviously one particular area where we are seeing it is making a huge sense, which is the funding. Are there other areas where investor can look at? Because, retail investor, institutional investor, right? And if you look at, I think mutual fund industry is making a good dent into the overall fixed deposit market, bank fixed deposit market. If you look at just, right, March 11 figures shows that we were roughly around 11.4% of then fixed deposit market. I'm talking about mutual fund AUM, which has moved up to roughly around 25%, right? Today, the entire fixed bank, bank term deposit stands at roughly around 200 lakh crore, and we are roughly around 47 lakh crore, right? Clearly, that is going to add up to this entire mutual fund momentum. Both are growing. I think the growth of mutual fund last 10 years has been 10 to 20%, whereas they have been growing roughly around slightly lesser, right? Clearly, where do you else see besides, the, margin funding there? Do you see the utility of this particular instrument in the investor's portfolio?
Yeah, I mean, the way Indian investors are moving towards equities, the way especially Gen X, Gen Y, new generation, they are pretty keen in buying, selling on exchanges there, which is quite evident when we look at the demat account opening, how many demat accounts we are holding right now in India, and the pace at which the demat accounts are getting opened. So all these put together, I can tell you with a lot of confidence that this is going to grow, because the more and more money will come in, F&O option, and then more and more stricter rules will come from a funding point of view. I believe investor will find value here, because one thing is very clear about any passive product. Investor comes to passive products with 4 key reasons, I believe. One is obviously on equity side, the underperformance of existing products. Especially on active side, we can see a lot of, especially on equity, some pockets, there are funds which are not able to, outperform the underlying index. Second is obviously the cost. Third is obviously the ease. Ease is something which is very relevant and important when we talk about liquid or any ETF. From that perspective, you can simply buy and sell on the on tip of your finger. That's very easy. And obviously the fourth reason is the innovation part. So more and more ease we provide, more and more investor will be keen to trade into that. And you can see that 550 crore kind of trading volume on a daily basis will grow significantly, right? So this is where we are heading into. I think we can look for a much brighter future from industry perspective, and more investor getting into this space.
Oh, wonderful. 550 per day. That's a good volume to start with. I'm sure we'll definitely add, as Mr. Umesh is sharing. Thank you. Thank you so much for that perspective. I think now it is your turn, our audience, right? Please feel free to ask questions. I think I could see a couple of questions there. I'll keep writing in the chat or by raising your hand, right? Let's make this more interactive and address any specific topic you have in your mind from our panelists, right? So let me just take the first question. I think this is, what are those? Why are these not a very commonly used investment option? May I request Umesh to please answer this? I think this has come from one of our investor.
This is a product which
attendees. They're talking why this is not very commonly used now.
Yeah. So this is basically, see, it's whenever we launch any product, anything, more and more people aware, making them aware about such products can always give them, understanding. We, as an Indian market, as an Indian investor, we come from a background of, FDs or fixed deposits, or maybe real or normal equity investing and taking a route through mutual fund. From there to making this to graduating them to this side, it is taking some time. But I think, as one of the panelists said, that right now it is 13,000-14,000 crore, and the industry, this liquid product, is growing. I think this is a kind of evidences are there that investors are now taking understanding this kind of product. And I think more and more, especially platform like yours, where you are doing such sessions where we're trying to educate people about liquid and all, I think by these kind of sessions, people will be more and more aware, and they slowly and gradually they'll move towards this side of the products.
Yeah. Thank you, Umesh. So I think next question which has come up is, how can this be popularized among retail investors and they make use of this particular good instrument? Can I have it from Mr. Sanjeev, please?
Yeah, so as Umesh also mentioned, it's a growing product, and if you look back around a year or two back, there are hardly 2 or 3 products. Today you have 8 products. So as more and more mutual funds launch this product, they will obviously use their marketing and distribution channels to popularize this product. And same was the case with ETF. Uh, 10 years back, ETF was a minuscule product. Now it is almost 13, 14%, 15% of the industry AUM. And it is growing at almost 2 to 3 times the growth in industry AUM. So as and when more products come on the market, as and when more mutual funds launch this product, their distribution channel will start selling. It will automatically get popularized. One thing also you need to understand, Saket, that unlike other products, the incentive for selling ETF is very less for a intermediary. So that also plays a role. So ETF has a very strong value proposition
Right.
for the end user, but it does not pay the intermediary that much. And fortunately, unfortunately, intermediary plays a big role in pushing these products. But that's the beauty of ETF, that as investors realize the value proposition, automatically the pull factor will come in and the money will go there. So till now, financial products to a great extent are push product. Intermediaries push it and they get incentivized, whereas ETF is a pull product because
Correct.
intermediaries do hardly get any incentive to sell this product. And despite that, ETF is growing at double the pace of the mutual fund industry, that it shall be showing that the pull factor is coming in. and that will eventually get more investors. And globally also the same thing has happened. Globally also the same factor played in. So first
Yeah.
20-25 years ETFs were nascent category. It's in the last 5, 7, 10 years they have now surpassed the active category. So we will gradually reach there. It's a process, and we are seeing acceleration in that process.
Great. Thank you so much. Very well explained. Clearly, it's being, despite being a financial products, largely a push product in India, we are seeing a great amount of adoption happening. So thank you so much for that clarity there. Last one question, we will just leave to take this one. This has come from, I think, Rakshay, one of our from audience, right? Does the institutional investor and PMS firms use liquidity because they do a lot of trading themselves and they also play on this, FNO at times, right? So have they been using? Can I bring in Sankar here? Can you answer this, please?
Yeah, yeah. See, yes. As per the question what we was asked whether PMS firm uses, exactly they use it. They use this as an opportunity for their trading purpose or investment purpose. Few PMSs uses. Okay, it depends on their SOPs, whatever the process they keep it. Whereas the institution investors, before it was not that much, but now they are coming. They have some limitations, whereas the AMCs have their own limitation, or as per SEBI limitation, they will be there. So beyond the limitation, wherever they find it an opportunity, they use this as an investment pattern. And we see a lot of PMS and institutional investors coming and buying these ETFs.
Thank you. Thank you so much, Sankar. Thanks a lot. I think it was really very engrossing and informative session. As we wrap up, I would like to thank our panelist, Mr. Uh, Umesh, Sanjeev, and Shankar for sharing their valuable insight today. Your expertise had enriched all our participants, right? And our understanding on liquid ETF landscape has really moved up, right? We hope that this webinar has been informative and that you all leave with a clear perspective on the opportunities and challenges which is there in the world of liquid ETF. Remember that ETF Junction and Pathshaala are here to support you on your journey in passive investing. Please keep locking in, right, and logging in for better understanding. Thank you, our audience, for joining us today, and stay curious, keep learning, explore the world of liquid ETF to make informed decisions. Thanks, entire panelists, from the core of my heart and from the entire team of ETF Junction. Thank you, audience. Thank you so much.
Thank you.
Thank you very much.